Vanessa, if you want to. Good morning, everyone. Welcome to our June 1st Platicas session. We are very excited to have everybody join us on this beautiful morning. I was telling the ladies just a bit ago, I can't believe today is June the 1st. Time has flown by. We're very excited. We are in full force conference planning. Our 37th state conference will take place September the 26th through the 29th in San Antonio, Texas, at the Estancia del Norte Hotel. I'm sure many of y'all have been receiving our emails, seeing our social media messages. Please make time to register for our conference. We have secured a fantastic lineup that we will be releasing at the end of this month, so stay tuned. If you're not following us on social media, please do so. We are on Instagram and Facebook. At this time, I'd like to thank our 2024 confirmed conference sponsors in no particular order. We have Southwest Airlines, Coca-Cola, HEB, Amalia Rodriguez Mendoza, BCL, VTX1 Internet, IBC Bank, Texas Health Resources, Kendra Scott, and Crosslink. If you know anybody in your networks who would be interested in sponsoring our conference, please send them my email address. I'm going to go ahead and put that in the chat box. I'd love to talk to them about collaborating and sponsorship opportunities. And in keeping with tradition with our Platicas, you might not be able to see, we are going to have our mug contest at the end of the session, about 10:55. So please get your cafecito, bring your coffee mug, and our chapter chair from Houston, Sandra Martinez, will be selecting the winner. Then I just asked the winner to send me an email, and I'm going to put my email in the chat box, and I will be sending you an e-card for Starbucks so you can enjoy something sweet this weekend. Nobody has any questions. I'd like to go ahead and hand it over to our Platicas Poderosas chair, the other Erica Moreno. Thank you very much.
Good morning, everyone. Thank you, Erica, for that great opening. I just want to thank everyone for joining us this morning as we kick off our June Platica Poderosa. This is our second one in our series. Moderating this morning is myself, of course, and also Chris Wilson. If I could show us with a wave if you have your camera on. She is the chapter chair of the Rio Grande Valley. Thank you, Sandra Martinez, chair of the Houston chapter. Jamie Sepulveda, San Antonio chapter treasurer, and Erica Aranguiz, chapter chair of the San Antonio area, for taking the lead on this Platica as well. We all collaborated, countless days to try to get this going for everyone. Special thank you to our tech co-chair, Vanessa. Give us a wave for making everything happen, making everything go smoothly. As always, thank you very much for that support. Before we start, I want to make sure that we know a few housekeeping things. Make sure that our mics are muted, just to avoid some background noise, and it makes it helpful for everyone to keep focus and pay attention. We do have a few people monitoring the chat, especially Vanessa. So any questions that you guys want to throw on there, we'll address them as they come. And then at the end, we'll have the opportunity to go live and kind of take some questions as we see fit. So don't hesitate to put any questions on there. We're going to try our best to address them all. But does anybody have any questions right now? Good. So introducing our first speaker, Sandra Martinez. So if you want to go ahead, she's going to introduce our first panelist. So I'm going to hand the floor over to Sandra.
Erica, it's my pleasure to be here and to really have helped plan the Platica. So thank you for that opportunity, both Ericas. I'm introducing Mrs. Donna Napoles. Donna is the Global Transactions and Corporate Finance Operations Lead for the Strategy and Transactions Practice at Ernst & Young. She works with the global transactions and corporate finance leaders to identify, articulate, and implement the global strategy that aligns with the broader firm strategy. She supports strategic initiatives across learning and development, finance, offshore enablement, risk management, and talent. Prior to this role, Donna spent 11 years in the transaction diligence practice, providing financial due diligence services to private equity and strategic clients and has participated in over 100 transactions in various industries, including oil and gas, healthcare, consumer products, and manufacturing. Thank you, Mrs. Napoles, for being with us this morning.
For having me.
Thank you so much. Our second panelist, Chris Wilson from the RGV, will introduce Miss Susie Neaville.
Good morning, everybody. I'm excited to be here. Thank you as well to be able to collaborate as well for this session of the Platicas. So I want to introduce our very own Susie Neaville. She is a community manager for JP Morgan Chase. In this role, Susie is responsible for advancing the bank's racial equality commitment focus on reducing the racial wealth gap by improving the financial health in the community. Susie hosts a wide range of financial health initiatives and hosts financial literacy sessions to amplify awareness and build trust in the community. Susie is passionate about community involvement and partners with local nonprofit organizations for overall support, including volunteer opportunities. Susie has over 25 years of experience in the banking industry. She has held several leadership positions, including, sorry about that, including sales and leadership coach, sales consultant training, branch managers, VP of lending, just to name a few. So welcome, Susie, and thank you very much.
Thank you so much, Chris. So as you can see, our two panelists are very, very well-rounded, great background. So with that, we're going to jump into our discussion this morning. So we're going to focus on a discussion on a topic that's very close to all of our hearts, of course, and all of our wallets as well. Money and finance. In a world where financial independence, especially for women, is both a dream and a necessity, it's essential to arm ourselves with knowledge, confidence, and those strategies to navigate the complexities of personal finance. So today, we embark on a journey to explore how we as Latinas can not only take control of our finances, but what can we do to keep thriving and to, at every stage of life, before 30, the age of 30, after the age of 30, are we planning now? What can we do? How can we conquer, the money matters? And with that, we empower ourselves and our families, and our communities, because most of us, I'll have to say, are the matriarchs of our families, right? And it's important for us to be financially capable and also just financially knowledgeable and to know which direction to steer our family. So, as we talk about thriving and empowering ourselves financially through every stage of our lives, let's discuss our lives early on. Young women, more importantly, young Latinas under the age of 30. What are we doing under the age of 30? Have we thought about these things? I'm going to start off with, Donna, like, what are the most critical financial habits that young women should develop early on to ensure long-term financial health and freedom? What kind of advice do you have for our young Latinas, Donna? Is there anything specific that we should know? Or, I say we, I'm not under 30, but those of us on the call that are under 30, what is it that we should know to ensure that long-term health, financial freedom?
Erica, I think building a healthy relationship with money is important early in your life. I know probably we all have similar backgrounds. My parents actually immigrated from India in the early 80s and came here with absolutely nothing and had to start from scratch. So growing up, we knew the value of money and not taking it for granted. So I think building that relationship early of not, knowing that money has value and investing it and thinking about what's the right things to do to have that financial stability, start as early as possible to start doing that. One thing I want to mention, especially as young Latinas, is if you're thinking about college, think about that as an investment too, because if you go to college, that's a great opportunity to build a new skill, get a certification. All of that will help you with providing you more opportunity long-term, and also helps with increasing your salary and giving you more ability to save. So if you're thinking about college, I would say that's one focus area that can help you with financial stability. One of the more tactical things I think you can do is start thinking about creating a budget. A lot of times, especially nowadays, we don't use cash, we use credit cards, we just tap. So we have no sense of how much money we're spending on a daily basis, on a monthly basis. So just taking a step back and looking at how much money are we making and how much money are we spending on a monthly basis is really, really key to understand what do you want to focus on. how much am I spending on restaurants or going out to eat, or even thinking about all the different, streaming options we have, Netflix, Hulu. You don't realize how all of that adds up as expenses. So just taking a step back and seeing, what do you want to prioritize? What maybe is not as important to you? And seeing if you're in a good financial stability by looking at a budget is really important. And I'll put it in the chat, but there's also some great opportunities. There's apps now on your phone where you can use budget tools, Credit Karma, Rocket Money. All of these apps have ways for you to input your income and your expenses, just to give you a sense of, what am I looking at and how can I, better my budget? And also another thing I would mention is, as you're starting your careers, just thinking about what are those benefits that your employer is providing and making sure that you're maximizing that. A lot of times people join new jobs and don't think about starting to invest in their retirement accounts, but that's really key. The earlier you start investing in things like retirement, then you're looking at long-term stability that you don't have to worry about down the road. I was listening to a podcast about a week ago where they were mentioning a lady who invested about $1,000 a year for 10 years, from when she was 20 to 30. And then she didn't invest again. So she invested $10,000 over 10 years, but didn't invest until, retirement. Retirement, she had $200,000 because of the rate of return on your money. That long-term value of money is so key. So the earlier you can start investing, it really has a long-term impact that can help you with financial stability. And then the last thing I'll mention is, as we are starting our careers when you're under 30, you get excited because now you have money and you're not depending on your parents. So there's something called lifestyle creep, where the more you make, the more you want to spend. I want to get a nice purse. I want to get a nicer car. Those are great, but that's just short-term satisfaction. Think about the longer-term satisfaction of stability. How can you support your parents that might be growing up, or if you're building a family long-term? It's really important to think of not just a short-term satisfaction but more importantly, how can you be stability over a longer period of time?
Thank you, Donna. Those are all good points. I can relate to many of those, especially for subscriptions that I don't know I have. However, we pay for them. That's a good point. And those are all things that we don't really think about. And as Latinas, we talked about this back in November, that the financial part of our lives is always sort of unspoken. And so those are all good things to bring about and to make people aware of. So very, very important. Susie, do you have anything to add to that?
Yes, I do. I love it, Donna. Oh, that was beautiful, because you hit on all the major points, and I'm not going to share anything new, but I do want to reiterate it because it is so important, especially what Donna mentioned about 401k. In our 20s, we're setting the foundation for our lives. We're busy. We are in child rearing years, right? Maybe we have young babies at this age, and it's so easy to get caught up with life and forget about our financial future, thinking our future financial self will deal with that. But there's nothing like the perfect time when you're that young to start investing in a 401k. The 401k is such an easy investment channel because you have it right there at work, right? You don't have to do a lot of research. You put money, your organization puts money, and it starts building. And that's why it is one of the easiest channels. You set that up automatically, and then you forget about it, and life goes on as you're budgeting. That account is still building up. So I cannot reiterate enough, invest in your 401k if your employer has that available, and I know that Donna mentioned, credit as well. This is also a time when we can get into serious credit card debt, right? Because we want to give our babies everything. We want stuff for ourselves, but careful with credit card debt because it's so easily accessible and we can get in trouble so fast. And if we start like that, then it's going to be difficult to save and invest in the future if we are so burdened with credit card debt. The other last thing I'll mention on this point is that if we have young children, it is a perfect time to start an educational plan for them, right? A 529. You'll be surprised. A little bit goes a long way. Even if you save $25 a month, a pay period, $50, whatever you can, start adding into that educational account for your babies so that in the future, you also set them up for success.
That's good. Good points as well. So Susie, Donna, if you have any resources, any links that you mentioned, Susie, we can drop them in the chat. That'll, I know we're going to move a little bit fast so that, anybody that's on the call might want some more information. We can click on that link and we can share them as well. Does anybody have any questions, any comments that they want to say out there in the chat or live? I feel like Chris wants to say something. No. Okay. Great. So all good points. Those who are under 30, those are all good points. I can definitely speak on a couple of those that, starting early is key, making sure that you have that mindset of the future. And I think a lot of us don't start with that because we don't have that initial foundation because of our culture. And I feel like, I don't want to make it too taboo, but it is sometimes our culture that makes us not discuss those things. And then we're like, if I knew then what I know now, things would have been so different. And honestly, it's just too late, right? But, we can always just share our knowledge and make sure the future, generation knows what they need to do. So shifting over to, thanks again, you guys, that's great discussion for under 30. Shifting over to over 30, or those who are not familiar with where to start. Susie, what do you think? How can women over 30 identify and prioritize their financial goals to create a clear path towards financial independence? Because, now we're over 30. We've missed all those, startup opportunities. What do we do now?
Okay. So when we're in our 30s, I mean, for those of us that have been there, think about that time. Those were probably the busiest times in our lives. Our kids are a little bit older. At least we don't have to change diapers, right? They can walk, run independently, but we are busy. We are busy moms and working, and we're at the peak of our careers. We're moving into either middle management or upper management, and life is busy. It's very hard, to manage the day, picking up the kids, dropping them off, taking them to taekwondo, ballet recitals, you taking care of yourself, working out. And so in the midst of all that, we can get trapped into overspending and not taking care of these critical things, the critical financial things, right? So by this time, hopefully we should have a good balance in our 401k. But if you didn't start your 401k in your 20s, again, I cannot reiterate that enough. Start that because it is super easy. If you don't have that option with your employer, find other ways. Most financial institutions offer, some type of individual retirement account. Trust me, your future self will thank you. So start with that. An emergency fund. I know Donna mentioned that earlier as well. Have that systematically. This is when you decide to pay yourself first, right? You do your budget. By this time, a certain percentage has gone into your 401k, but then when you work on your budget, try to remember that 50-30-20 rule. That's a good rule to go by, right? Where 50% of your budget goes to fixed expenses or needs, right? Your mortgage, your car payment. 30% of your expenses goes to wants, because we still want to treat ourselves, right? We still want things. We want to be able to go do our nails or get that facial. Budgeting is not about hating your life. Budgeting is about telling your money where to go. This is why it's so critical. And then that last 20%, you can use it on your savings or paying off credit card debt. Now, if you are in deep financial credit card debt, get rid of it. Have a plan. Think about the last time that you looked at your credit card statement. And I mean, really look at it, because nowadays we all go paperless. I know I haven't received a statement for any of my credit cards or bank accounts. And it's easy to forget. Like if you have the app, go in there, look at the statement. What is that beginning balance? How much have you paid for that balance? How much did you charge? What is the interest rate? So I would safely say that most of us on the call today have a credit card. Yes? Okay. Do we know what the interest rate is? How much are we paying on these credit cards? These are things that we need to know and have a plan so that we don't get in trouble like that, because again, credit is so easily available. And with all the things that we want, right? We live in a world of instant gratification. We want it and we want it now. It's easy to get into that financial burden. And then the last thing is, I know I mentioned having an emergency fund. You know, an emergency fund is always important at every stage of our lives, not only because it serves as a resource if you get caught in a bind, but also because it gives us so much freedom, right? Freedom. If you know that you have a little bit of money aside, you know, it can mean that it gives you freedom from a toxic relationship, either a personal relationship or even a work relationship where you don't want to be there, but you have to because the next month's rent is due, you know? And so that's why, again, so critical to have at least a small emergency fund and pay yourself first. You owe it to yourself, and do it in a systematic way where you don't even think about it, because savings is all about creating a habit. It's all about, it doesn't matter the amount. What matters is that you do it. Just the way we wake up in the morning, we do the same routine, right? You go, you wash your face, you brush your teeth, you don't even think about it. You could do it with your eyes closed. Same applies to savings. It's a habit that we want to create until it starts building and building up. So I know I talked a lot. Sorry about that.
Oh, thank you, Susie. That good information. Donna, do you have anything to add?
No, I think that was all great, Susie. I 100% agree with all of that. Even now, I will still look at my credit card statements and say, well, I spent that much on XYZ. I didn't realize. So that stuff, those skills don't go away. I've been doing that since I was 20, and I still remember my dad would look at receipts when we left. I don't know if any of you guys remember Sack and Save, but that's the grocery store we had. And he would check to make sure that they gave him the savings for, you know, anything that was on sale. I still look at that. I still do those little skills that you start in the beginning. It's really important to just really understand what's on your credit card, how much you're spending, and educate yourself so you're not blinded by a really large credit card statement where it leads into, you know, credit card debt and you're not able to keep up with it. The other thing I'll mention is I just put in the chat a lot of ways to educate yourself. There are some really good ways to listen to podcasts. There, you know, now we like tidbits of information, right? So podcasts, 30 minutes, just understanding what are some basics about budgeting or setting financial goals, or, you know, what are ways to cut spending in places that maybe you didn't think about before. I think just learning more is always really important to help you increase your skills with financial stability. And also just another way to help you with other people that are doing this on a regular basis and saying, okay, if that person can do it, I can do that too. So just learning from others. And then the last thing I'll mention is talking to your friends, talking to this group. These are great resources of what are people doing, and just learning best practices. I always ask my friends, what are you doing for a savings account? What are you doing to, you know, lower your expenses? You can learn a lot just from asking your friends too.
Thank you, Donna. That's very important. Keeping us talking as well will empower us. So I'd like to go into the chat really quick, and Susie, really quick, if we can answer this question for Victoria Gonzalez, what is a 529 plan? And is it something we can seek out through our employer, like a 401k, or is it something outsourced?
Yeah, so an employer will probably not offer a 529 plan. Very great question. A 529 plan is just an investment for educational purposes, for anybody really. I opened one for each of my kids early on so that they could be, you know, it didn't cover all educational expenses because, as you know, education is super expensive right now. But it is an option, and it is such an easy thing that we can do. You don't need a lot to start. Check with your financial institution. Most of them will offer a 529 plan. I know that there's also some available online. But again, great question, because it is a great way to start. A 529 plan is an educational account.
I'll just add on to that. There's different plans out there. So make sure you're speaking to someone and researching. They have plans by state, and some states have more limitations on how you can use that money for your children than other states. So actually Texas might have more limitations. So my example, I actually have Nevada 529 accounts because it has more opportunity if my kids want to go to school out of state or just different options. I just want to recommend doing research when you're looking into all of these things.
Great
Thank you.
points.
Those are good points. I feel very behind with my children since I don't have a 529 on them. But with
Never
that
too late.
right. So with that said, how do we catch up? How do we, late career gaps, late starts in financial planning, what resources can help them catch up and secure their financial future? But before we go into that question, I'd like to say Sandra Garcia is probably not going to get the 4,200 Louis Vuitton purse, right? That. Not important, but yeah. So how do we catch up? Like, what do we do now that, we know about the 529, we know about 401k. Now, what do we do? How do we catch up? Because we need it.
I think it's just starting small, right? So sometimes people think you need to make huge steps to get ahead, but it's really just little things here and there. I think it's taking a step back. What does your financial picture look like right now? Where do you want to be? And, as Susie mentioned, there are certain ways to set financial goals. The epitome of that is, let's just save 20% of my salary towards a savings. But that's a big step sometimes if you're starting from zero. So even just a little bit, can I set aside 5% of my salary? Can I set aside 10% of my salary? And making that something that's automatic, that you're starting to build up those savings whenever you start. Again, it's never too late. We always talk about these things being, if you can start early, it's great, but you can always start. And so it's never too late to start building those skill sets. So my suggestion is just starting small. Sometimes these things feel really overwhelming as you grow older because you have more responsibilities, you have children, you have growing parents, but it's just a matter of what are the little things I can do. Maybe I don't need Starbucks every week. Maybe that can go to my savings fund. Maybe I don't need to do Netflix for a month. Maybe I can find little things where that money, and just having it where it's automatically going to a savings. Then you don't miss it, right? If they're doing some type of auto pay, this is going straight to a savings account. I'm not looking at it. Every month it's sending $500 to this account. Then you're not missing it, and you understand how to adjust your lifestyle accordingly. So that way you can build up that savings and live your life without that money coming directly towards you and going for a longer term stability.
Absolutely. Beautifully said. And this is why budgeting is so important. Budgeting is just telling your money where to go. So it's good to figure out, wait a minute, in 1 month, how much money did I spend going out to eat? I think that number is going to shock us all, right? Because we think, oh, it's just about, $50 a week or $100 a week. But when you start adding those figures, how much money is it really? Is eating out keeping us poor? So that's why budgeting is so critical. Don't miss that step. After today's call, you're already on the call today. After today, grab a piece of paper, write down how much money did I earn? Write it down. What are my expenses, and where on these expenses can I make cuts so that I can start putting that money into more important things like savings, like 529 plans, like 401k plans. That's how, you want to do it. Find out where you can cut and then make those moves. And like Donna said, baby steps, yeah, this could be very overwhelming. I get it, but start small, start somewhere, but start.
Very true. Very true. Start small. Doesn't matter how small. So I want to touch on a little bit. I'm gonna go back a little bit on credit, because under 30, we're barely understanding where we're in college, we graduate high school, going to college, we're understanding credit. After 30 now, we're like, oh no, my credit really does matter, right? So how can we talk about credit, and how does it pay in financial empowerment journey of a woman over 30, and how can they improve their credit health? Because that's something that we don't know either. It's like, oh man, I messed up my credit, but how do I fix it? And how long is it going to take? What do I do with it? And then after it becomes good, like, okay, now I'm, in credit heaven. So, I don't know whoever wants to start, Donna or Susie can talk
Happy
on
to
that.
start. Yeah, sure. I'm happy to start. Yeah, like you mentioned, credit is a really important thing that we should think about when we're talking about financial stability. It's really important when as you're thinking about buying a new car. It impacts your interest rates when you're buying a new car, or looking at a house. It impacts your interest rates, or just getting an approval for a loan. Credit is really, really important. So just like everything else we're talking about, the earlier start to increasing that credit score and learning what it is really key too. So just a few things that really impact that is, how are you using your credit cards? and we're spending on it, but are we paying that full payment every month? Are we doing that on time every month? And I really mean it when I say every month. There was one month, this is probably less than 5 years ago, I had a Macy's account and I just missed that email, and my email was just getting overcrowded, and I completely forgot to make that Macy's payment. It was small, it was $50 or something, but because I missed that payment, that automatically impacted my credit score. And let me tell you, my husband was not very happy with that. But the thing is I realized, that's because I was not keeping up with it. So how do I fix that where I'm not forgetting about payments or, thinking about it? So I immediately changed that to an auto pay account. So that way I'm not thinking about it. It is automatically getting paid from my checking account and I'm not forgetting about it. But it's really important. A lot of times we're spending and not just paying the minimum amount on that credit card payment. And if you want to increase your credit score, you have to pay the full amount. So it goes back to what we were talking about, what Susie was talking about, your spending habits, making sure you're not just spending all this money on your credit card and not being able to pay that balance. If you're not able to pay that balance at full, do not spend that much money. You shouldn't be doing it if you cannot do so. The other thing that's really important is to frequently pay it, right? Every month, you're not changing that. If you make more payments, then the credit score bureaus are looking at that and saying, okay, this person's really trying to catch up and being diligent about it. So just continuously paying that full amount. The other thing is when you have a credit card, they give you a limit, right? So let's say on a credit card, my Macy's account, $10,000 is my credit limit. It's key that you do not try to spend the max on your credit limit. You want to try to do at least what the rule I've heard is 30% or less. So I shouldn't be spending more than $3,000 on a credit card limit of $10,000 because the more you spend, that really impacts your credit scores. Try to keep it at that 30% or below of whatever your limit is. And then if you have late or missed payments, just really focus on catching up. That's one of those things we talked about, as we try to build our financial stability, it's really catching up on those late payments and making sure we're making those full payments.
Yeah, thank you, Donna. You touched on a lot of subjects that I think is a little touchy for all of us, especially when we talk about credit and credit cards and payments and things like that. Susie, do you have anything to add?
Yes, I do. Excellent points. Excellent points. Credit for some of us, it could be very shameful. When we think about our own credit situation, we can find shame in that, but I'm here to tell you, let that go. Because when we make financial decisions, I'm reading this book called The Psychology of Money. And it illustrates how when we make financial decisions at the moment, they make the perfect sense. So if at the moment that made you happy, you had a reason to put something on that card, okay, don't feel bad. All right. Personally, I have, not had the best credit. I didn't have credit that I was proud of at one point. There's things that you can do. The first thing, is all those things that Donna mentioned. Exactly. And I'm just going to reiterate on some of those because the first thing you want to do is, yes, know your credit score, right? Find an app where you can look at it constantly. You can see if it goes up or down, you're on it. And 3, understand what makes that number. So if your credit score is 650, how did they make up that number? Where do they get information? You want to know that. There are 6 factors that affect your credit score. The first one is your payment history. Are you making those payments on time, like Donna mentioned? The second is the age and type of credit. So how long have you had credit? The longer you've had credit, the better for you, right? The available limit, that's the third one, like Donna mentioned, only spend 30%. So if you have a credit card with a $10,000 limit, all you want to use is $3,000. So that keeps you under that 30%. Of course, you want to pay it off within the same cycle so that you're not paying interest. The other component is the total balances, right? How much do you owe in your whole financial picture, your mortgage, your car? That also has an impact on your credit. Your recent credit behavior. Are you going to the mall and applying at Macy's, at Express, at Dillard's, do you have all this lineup of credit cards that you have recently applied for? That can affect your credit. And then your available balance. How much do you have available? So there's 6 factors that affect your credit. If you want to improve your credit, that is your goal this year, that is your mission, you're going to do it. Know these 6 factors and work on them systematically.
Good point. So in the chat, Sandra Martinez says that her bank has a credit score tool, which I think that's something that's very new and very common, and it's becoming more common. Is the different, even a credit card I have has a credit tool. So, you know, looking into those things and making sure that you keep track of your credit score is key. A lot of points you all touched on, and I'm like, okay, we need to stop this. We need to stop this. Moving forward. Erica and Denise.
I love that because yes, most banks offer, like for example, Che has Credit Journey. It's free for everyone. You don't need to be a customer, whatever your app of preference is, but get one, be on it. Look at that score every day if you can, and then set it up with alerts. You know, I get alerts if my credit goes up or if it goes down, and it's just wonderful because I'm on it. I'm able to see what happened.
Yeah, credit impacts everything, even your children who are going to college and they're going to need loans, parent loan, parent credit. And so it's something to keep track of at all times. So
in employment, you know.
Oh my gosh, yes, that's a good point. Erica and Geese, what advice she's saying in the chat, what advice can you give to help navigate finances? We've touched on a little bit about that. But one of the most important things I think from her question is in saving when unexpected things out of our control happen. Rising property taxes that raise our mortgage several $100s, or rising cost of gas and groceries. So I guess, how do we address those emergence or those non-controllable items? I can't control that, but the expense is here. What do I do? How do I manage that? I know we didn't talk about these questions, but right off the bat, right at the top of your head, if you have something like, how can we help these things? Donna, Susie, anybody?
Okay. Well, you know, we can have the most beautiful financial plan ever, really pretty with flowers and everything, but life is going to happen. You know, we are going to be faced with those challenges. And that's just something that we need to plan for right now. So think of your future self always 10 years from now. Will there be challenges? Absolutely. You know, just when, like, for instance, with myself, I have 3 kids. They're all financially independent. Does that mean that they don't come and reach out to me every now and then because they have a flat tire? No, right? So, I mean, stuff is still going to happen. Knowing that we're going to have these challenges in our lives, our financial plans can absolutely change, and they should. I mean, they will. We change. Knowing that, that's why it is so, again, so critical, so important to start with those baby steps. No, reevaluate your goals, reevaluate your priorities. What's more important to you, you know, right now? And as you think about your life 10 years from now, and start there. You know, if all you can save after you do your budgeting, you think, okay, I can save an extra $50 or I can put an extra $50 into my credit cards, do it. But start now, because knowing that we will have challenges, that's what you want to get ready for. Just like when we prepare for a hurricane, right? And I say that because I live here in the RGV. You know, what do you want to get? You want to get your candles, you want to get batteries, you want to get your flashlight. Same way, plan for the unexpected, because it is expected. It's going to happen, but you've already planned for it. You've already started your emergency fund. You've cleaned up your credit. You have available credit should anything happen and you need to use that as a last resort. You have that available.
Donna, anything to add?
I 100% agree with that. Look, we're in a really, really difficult economy, and I know that we all feel it. Groceries are more expensive. Everything's more expensive, right? And so it's hard. It's really hard. And so going back to that emergency fund, really prioritizing that when we're thinking about our savings is key. So that way, when there are these, you know, one-off expenses that happen, or, you know, heaven forbid we lose our jobs in this type of environment, it's really important to have a backup account for that. So I think Susie mentioned this, but having an emergency fund that really covers 3 to 6 months of expenses, your regular expenses, is really key. So trying to build that up when we're talking about the little things that you do, can you just put $10 or $50 towards making that emergency fund? That should be a separate savings that you should be building up in addition to your retirement and long-term savings. Now, one thing I just want to recommend is that there are savings accounts at bank account or at your bank, but also online have a lot of savings accounts too. And those actually have higher interest rates. So if I put in $500, there's higher interest rates that it's going to accumulate. So just putting in that little money every month or every paycheck and building up that emergency fund in a savings account that will have a return on it so that it's, making your $500 to $800. That's really helping you build up your emergency fund. So I would prioritize building that fund.
I had no idea savings accounts existed outside of our bank accounts. If you just get one, but
Yes.
That's key. Good. Anything in the chat that we can touch on? Thank you, Vanessa, for putting those factors that impact credit. There's going to be a lot of highlights in the chat. So for those who are on, just look on that, and thank you again for Vanessa for putting those on there. Susie, Donna, I can't thank you all enough for all those points, but I want to shift over a little bit to those who have that financial plan already in place. And I just want to touch on one question before we move forward. For those who are financially invested already, they've got their strategies, they've got, their security, they're good. They've started from the very beginning. How can we help them grow? Like what other strategies can further that or enhance that they can, just tidbits and thoughts from you all?
Yeah, I can start, Susie. I just say, again, going back to everything we mentioned, educate yourself. Listen to these podcasts, listen to these influencers on Instagram. They have ways to invest your money and stretch your dollar even more. So let's say you have a nice emergency fund built. Let's say you've built out your savings account. How about starting to invest in stocks and bonds? A lot of those have really high return on investment. And so it's just researching the right ones to get started. Again, talking to your friends or your mentors of where they're investing their money, but it's really just finding other opportunities to invest. It doesn't have to be one vehicle. It doesn't have to be just your retirement or just your savings or emergency fund. If you can do all of those, then start finding other ways to invest money. Also, a lot of people are investing in things like Airbnbs or rental income or, other ways to find money. So just think about how can you find a way to stretch your dollar, and other ways to focus more on investing than spending is what I would say, is because that has, longer term opportunity for you, for your family, and ways for you to have more flexibility as your children are growing up or as you have, these one-off issues that might happen. So I think it's really key to just educate, and learn about other ways to invest.
Susie, anything to add?
No, I mean, I echo that sentiment. I mean, absolutely. When we are already at that age, we also are getting larger bonuses at work. What are you doing with that bonus? If you get a raise, and I can safely say all of us on this call have gotten a raise at one point in our lives. Yes. What happened to that extra money? Where did it go? And so, like Donna mentioned, educate yourself. Education. You being on this call, thank you so much. This is your step number one. Don't let it go. Start researching, take ownership. If you get a large bonus, don't let it sit in a savings account. Look for an investment vehicle. If you don't know where to start, there's so much information. Trust me, if you set an appointment with a banker, they're going to want to support you. Most apps also, you can do investing on your own. If you feel confident, we can do it. We can absolutely do it. If you do not want to meet with a financial advisor, if you are so new at this and you feel like you need help, then seek that. But you leverage other investment vehicles. Absolutely. Maybe you had a dream of becoming a business owner. You've been thinking about it. You never did it for one reason or another. Maybe now is the time to start, So make good use of that investment and don't just let them sit there. It all happens in the brain, right? What narratives, what are we telling ourselves? Oh, I'm already maxed out, or I made all the money I'm going to make. No. Go back and reevaluate what's happening right here, because we absolutely deserve more. Absolutely. This is how we're building that generational wealth that eventually will be transferred to our next generation. We are making that happen for them. And the other thing I'll mention is that, are we getting them ready? You know, are our kids who will inherit all this wealth that we're building, are they going to know how to manage it? So that generational knowledge is equally as important.
So, Susie, really quick, Wilma Lopez is asking really quick tips for choosing the best financial advisor or engaging one. Should we? Your thoughts on that? Just a couple seconds.
Well, you know, I'm biased, obviously, because we have a team of experts, but do some research. I mean, that's the best advice I can give you. There are some times, like I mentioned, you might be able to do it on your own. You might not even need to seek a financial advisor, but if you know, have some doubts or you don't feel like you could do this, absolutely seek some help. And at the end of the day, nobody's forcing you to sign anything or invest anything. That's going to be on your choice, but do schedule some time to do some research.
And thank you, Susie. And Donna, I just want to be able to touch on everybody in the chat. Well, we mentioned the accounts and the savings accounts. Somebody blended on this, is higher interest rates on the online accounts a good thing?
Yeah, so I was just responding in the chat. So what I mean by that is your savings account, basically the bank or the online account is providing additional money to your account, right? So the example I put in there is 10% is actually what online savings are, not at that high level, but Marcus is the one I use, Marcus by Goldman Sachs. So the interest rate for that is 5%. So if I'm putting in $500, they're matching that with 5% and increasing my account by adding 5% of that amount. So it's growing your account by them matching that. So that's why I'm saying online savings accounts have higher interest rates. It means what they're adding to your account. Hope that makes sense.
Got it. Perfect sense. Is that good, Belen? I think that answers the question. And then CDs, is that something to consider for long-term savings? Susie?
Most CDs are for either 2-year or 5-year terms. Not really if long term is really anything over 5 years. So if you have, let's say that, you know, you're saving money for a down payment on a house, a CD could be a good option because typically they're like 5 years, and that's typically the length of time that it takes us to save money, you know, for a down payment on a house.
Okay, good. Mm-hmm. Any other questions? I think there's another one. This is near and dear to my heart, which is college for kids. What's a good approach to helping our kids coming out of college is to establish their credit? And I think this is a hot topic right now with you know, kids especially.
So there's several
credit question. I think my internet went out.
Oh, it's what is a good approach to helping our kids coming out of college establish their credit?
Yeah, so I was just going to mention that, you know, a lot of times back in the day, our parents think if you pay everything in cash, that's the easiest way, but you also have to build credit. Don't spend too much, but also build your credit too. So things that my parents taught me was for the first car that I purchased, making sure I signer on that so that I'm building up my credit there. So, and also if they're starting to live in an apartment, paying rent on an apartment and doing that on a timely basis, all of that helps. And the earliest that they can open up a credit card reasonably, not overspending on it, but just as Susie mentioned, the oldest account that you have, that will help you with your long-term credit score. So just opening up credit card account, maybe just one, but helping build up that credit on a small amount.
Good. Susie, anything to add on that?
No. I mean, just going back what Donna said, you know, an easy thing that you can do to help your student transitioning from high school to college is to add them as an authorized signer to your credit card. You give them a limit. Let's say your credit card limit is $5,000. You can assign them a limit of $500, but they have their own card, and in that way, they start building credit.
But not max it out, right?
Yeah, and not
that limit.
All they could do is $500 damage.
Yeah, even that they'll say it's not enough. Oh, it's never enough. Well, thank you so much. While we could talk about money all day long, I mean, this was very eye-opening. Susie, Donna, very, very good insights on everything. I think everyone agrees. I see everyone, saying yes. Money's important. Finances are important, and what we did back in the day affects us today. And so, again, I always say, if I knew then what I know now, things would be so different. I wouldn't be playing a catch-up game. But again, thank you, ladies. Very, very impactful. Great discussion. I'm going to pass it over to Erica now. Erica Lopez, our chair. So
I'm sorry, I just have one more to add, if you don't mind. I know we're
go
coming
ahead.
time, is that, every piece of our financial game plan starts with earning money. I mean, in order to do all these things, we need to generate that income, right? What is our income potential? Have we negotiated our salaries? Have we increased our salaries? Have we gone back to school? Never let anybody tell you, oh, it's too late. Oh, you already have kids. Oh, I have little kids. I don't have time. No, this is an investment that you're making on yourself, and you are increasing your earnings potential. Because if we're not making any money, well, then how are we going to save, right? How are we going to build that wealth? So don't let that stop you. Go back if you have not, finished your degree, or you want to get your master's degree, or, always keep increasing your earnings potential. And then the last thing I'll say is, we make time to go get our hair done. We make time to go get our nails done. We make time para ponernos bien chulas and go on a date. Let's make time to sit down and have a date with our finances. Set that time. You owe it to yourself. And it is so much more important. Sit down, make your budget, have a plan, set your financial goals. And if you can share them with somebody that's going to hold you accountable, even better.
Thank you.
Awesome. Thank you so much to our panelists, our moderators, our host chapters. It was a wonderful discussion. As you can tell, we had many members join in. I think this is probably one of the hottest topics, and we can always learn something new for our younger generation, and for us, in our 30s, 40s, and 50s and beyond. It was very helpful information and great reminders. I was making notes and saying, oh, I need to make the list of all my finances and catch up on all this stuff this weekend. So they're very great, friendly reminders. At our state conference, we're also going to have a financial session as well. So please make plans to join us for that. So I want everybody to take out their mugs and proudly show them on the screen. Sandra Martinez, our chapter chair from Houston, will be selecting the winner. So Sandra, take it away.
All right. Let me scroll through these, let's see.
I'm going to be boring and just do a stand.
Does a to-go mug count? No.
If it said Justin Timberlake, Donna, since you were at Justin's concert last night,
Okay, we've got several people on camera here. Oh, did I miss one? Let's see. Freedom. I really like I like all things are possible.
Is that Chris from?
Chris Wilson.
Okay, awesome.
Possible. I think it's a good reminder for the session and everything that we're learning, and Susie's advice of don't it's not ever too late. I think it's anything is possible. We can set our mind to it and really make our goals, and whatever we have that whatever our goals are for money, we can make it happen. So
Yes, wonderful advice. Awesome. Well, Chris, I will go ahead and send you a Starbucks gift card electronically, so keep an eye on your inbox for that. Thank you all so much. It is 10:55, so we will give you back 5 minutes of this beautiful Saturday morning. Our next Platica will be held on Saturday, November the 9th, and we're going to dive into the topic of Alzheimer's and having to deal with this this horrible disease that is affecting our Latino community, and how us as caregivers can assist with our families when we have family members going through that transition as well. So mark your calendars. That will be Saturday, November the 9th. I will go ahead and update the calendar invite on our website. If you have not visited our newly improved website, it is www.hwnt.org. Please go on there, take a look at our events. If you have any questions, I'm going to put my email in the chat one last time. I look forward to hearing from everybody, and hopefully we'll see everybody in September in San Antonio. Have a great Saturday. Bye-bye.
Bye. Thank you, everyone.
Hi, ladies. Thank you.
Bye, thank you.
Thank you.